Hi there everyone, this is Matt Curfman here with Richmond Brothers, and this is the October version of Matt's Minutes. Thank you for tuning in. Well, as many of you saw on both your statements and headlines, October was an incredibly volatile month. And as we kind of got to the end of the month, we did see some signs that some of the broad stock market indices, there was talk of a correction. And what a correction is not a dip into recession. A correction is any of the broad markets, which would be, say, the Dow Jones, the NASDAQ, the S&P 500. If they come off of their highs by a 10% swing, that's considered to be a correction. Now, that does not mean we're tipping over into recession. We talked in the last couple of months and at the end of the summer, kind of leading up to this wall of worry that's out there. And a lot of that had to do, one, with rising interest rates, which we've seen and expected from the Fed, slowing growth due to trade wars and kind of the tariffs that we're seeing a lot of talk between US and China. And then we also had the midterm elections coming up on November 6th. So keeping all of that in mind, there was just a confluence of a lot of events that caused some investor anxiety. But just because that month happened, it does not mean that we're tipping over into recession. So as we take a step back, we want to continue to focus on GDP, which is gross domestic product, corporate earnings and growth year over year, and then use those along with consumer sentiment, consumer confidence, and consumer spending patterns to make decisions as we wind down the year and move into 2019. So that said, during the month of October, the S&P 500 year-to-date was up 1.4% if you looked at the price return. The aggregate core bond index was down, or negative 4.3%. And so just to set some perspective, as of October 31st, if you had a 30% stock and a 70% bond portfolio as a broad benchmark, you would have expected to experience a negative 2 to 3% performance on your portfolio for the whole year. If you had a 60-40 bond stock portfolio, again using the price return of the S&P 500 and the aggregate core bond index, you would have expected to see about a negative 2% return. And if you had a 50-50 bond stock split using the same benchmarks, year to date through October 31st, you would have seen negative almost 1.5%. So I want you to understand those numbers just to have some perspective. And we don't think things are going further south. In fact, as we've gotten here into the first week of November, I'm recording this just the day after elections, and we're seeing some positive signs. And again, whether we're pro-Democratic, pro-Republican, or neither, getting beyond Election Day removes uncertainty. So now for the next 2 years, investors have an understanding or an expectation of how the government will work together, even if that means a little bit of gridlock back and forth between the House of Representatives and the Senate. So keep that in mind, and we think that the correction is temporary. We do think there's room for growth as we wind down the year and move into 2019. Our forecasting still predicts that at some time, maybe into 2020, we could start to see some triggers that would cause us to tip over into recession. So we want to be mindful of that, but that does not mean we immediately start turning the ship and getting way more conservative right now. We think 2019 will be a year to slowly pivot and continue to use risk-aligned profiles to help manage your individual circumstances with your individual risk tolerances as far as portfolio decisions. So again, getting elections behind us gets rid of uncertainty. We expect interest rates over the next year to continue coming up, but that's a sign of a good and growing economy. And eventually we do think things will start to slow down, but not in the near term. So we will be back on in early December to give you an update as we move through the Thanksgiving season. And so if we don't speak to you in advance of that, have a wonderful upcoming holiday with your family and friends. And if you have any questions, we are here to work for you. Please feel free to call or email, and we appreciate having the opportunity to work for you. Thank you for tuning in for this Matt's Minutes for October of 2018.